So on the surface, the housing market feels, well, kind of stuck, right? Like it's in this big holding pattern. But if you look a little closer, the latest Inman Intel Index survey is telling us a totally different story. There are some really significant shifts happening just out of sight.
And hey, that feeling of being stuck, it's not just you. The survey actually confirms this is what most people in the industry are feeling. But that's exactly what makes what's really going on so fascinating.
So what is moving underneath that calm-looking surface? What are these little hints that could point to much bigger changes down the road? Well, that's what we're going to dig into right now.
Okay, so we're going to break down three main things the data is showing us. First, economic anxiety is spiking. Second, sellers are starting to test the new commission rules. And third, something I didn't see coming, the recruiting race is back on.
All right, let's jump into trend number one, this spike in economic anxiety. I mean, let's be real. Agents worrying about the economy is nothing new, right? That's kind of part of the job. But what's happening now is different. The level of that worry, it's shot up in a big way.
And you can really see it here. Check out this chart. Over the summer, things were relatively calm, pretty low anxiety. But then, boom. Look at that bar for October. Agent anxiety just rocketed up, hitting the highest point we've seen since that market dip last spring. This isn't just a little blip on the radar, folks. This is a huge jump, and it's telling us something's definitely up.
So what's the story here? Well, this timeline puts it all into perspective. See that last big peak back in April? That was all about the new tariff announcements. Then we had a pretty chill summer. But this new spike in October lines up perfectly with all the signs we're seeing that consumer confidence, in general, is starting to wobble. So this isn't random. It's a direct response to what people are feeling in their wallets.
Okay, moving on to our second big trend. And this one is fascinating because we're just starting to see the very first signs of a change in how sellers are acting, especially when it comes to buyer-agent commissions.
Just so we're all on the same page, what even made this possible? Well, after the big NAR settlement, the rules changed. It basically gave sellers a lot more wiggle room. They aren't automatically expected to cover the buyer-side broker's fee anymore. And that opens up a whole new playbook for them.
So the big question is, are sellers actually doing this? Are they using this new power? The answer, for now, is not really. As of October, almost no one is. I mean, the vast majority of agents said that less than 1 in 10 of their listings refused to cover that fee. So right now, it's more talk than action.
But, and this is a big but, here's where it gets interesting. Even though very few people are doing it, a lot of people are thinking about it. The data shows that with inventory slowing down, the temptation for sellers to just pocket that commission fee is growing. And you know how it is. Sentiment is often the first domino to fall before the action follows.
And this all leads us to our third and final trend. And honestly, this one might be the most revealing. It shows this huge growing gap between what agents are worried about versus what their brokerage leaders are losing sleep over.
Think about it. For most of this year, the #1 boogeyman for brokerage leaders was the economy, the market, interest rates, all of that stuff. That was the big cloud hanging over everything. Well, not anymore. In a really surprising twist, recruiting, finding and keeping good agents has now jumped to the #1 spot on their worry list. The talent war is officially back, and it's a bigger deal to them than the economy itself. And this just lays it out so clearly. You've got agents on one side, looking outward, totally fixated on the economy. How is this going to affect my next deal? Then on the other side, you have the brokerage leaders looking inward, worrying about, do I have the right team to get through this? They are literally operating in two different worlds right now, and you have to wonder what that means for the future.
All right, so let's wrap this all up. What are the big takeaways? 1, agent anxiety over the economy is at a multi-month high. It's real. 2, sellers aren't really messing with commissions yet, but the idea is definitely catching on. And 3, we've got this major split. Agents are worried about the market, brokers are worried about talent.
And that leaves us with one last thing to think about. All of these trends, the fear, the commission tests, the talent wars, they're all just simmering right now while the market is kind of cool. So what happens, what do you think happens when things really start to heat up again? That's the billion-dollar question, isn't it?